Hello everyone, great to be connected with you once again. And I think at the outset, let me start by wishing you and your loved ones a very happy 2023. We just concluded 2022 and we all know what an interesting year it turned out to be. We began the year thinking that, finally COVID and all uncertainties are behind us, but very soon you had these geopolitical issues come up. And that only aggravated the inflation challenge, which already was becoming a big problem for central banks across the world. And what you saw subsequently was a very strong response from central banks. I think we saw unprecedented monetary tightening. And just when things looked like they are nearing some sort of a peak, you had Japan join in the rate action later last month. And Japan in general has been a very deflationary economy. So for them to acknowledge inflation obviously means something. But I think the good news is that as we enter 2023, inflation is likely behind us as a problem, because central bank action will make sure that inflation will probably peak if it already hasn't. But I think the other set of challenges that it brings is around growth slowdown. So the combined impact of all the monetary tightening that we have seen so far, the fading up of one-time reopening-led demand, etc., would mean that you should brace for some sort of a global slowdown as you enter 2023. Now, when you think of India obviously is in a much better shape today because of the entire deleveraging that corporate India has gone through over the last several years, the clean state of our banks and so on. But when the global economy slows, there are strong capital and trade linkages that we have with the rest of the world. And that means that in a global slowdown, I think we will also slow down as well. But I think the brighter side of this slowdown should be that if you look at the recovery so far, it's been very two-pronged. Exports have done well. Within consumption, urban consumption has held up well. But when you think of pockets like mass consumption, they've suffered. And they've suffered because inflation has been a big drag on real disposable incomes. Now, if you enter a period where growth is slower but inflation is much lower, then that would mean that mass consumption could revive again, for the simple reason that inflation will become lesser of a challenge, and hence disposable incomes will rise on a real basis. So yes, some parts of economy like exports, etc., will suffer, but mass consumption should revive. So I think on an overall basis, we think of 2023 as a year where this K-shaped recovery should eventually become more broad-based. You should see what we call a K correction, where yes, there is some near-term pain, but the eventual economic backdrop becomes much more balanced, and that in turn makes economic growth even more sustainable on an ongoing basis on the other side of this slowdown. So yes, there is a silver lining, and now coming to markets and our portfolios, I think 2022 again was an interesting year for stock markets, a very volatile one. But if you think of it on an end-on-end basis, very little change. I think the large cap indices did manage to eke out very minor gains for themselves. But when you think of the mid cap and the small cap universe, the challenges were very significant there. Now, coming to our two PMSs, we have been very significantly skewed towards mid and small caps, and in spite of which, I think we held up decently well in a relatively turbulent year. And one primary reason in our view for that is the fact that we've continued to focus on high ROEs, high cash generation, and sustainable long-term growth. And I think that combination means that whenever macro uncertainties become pretty significant, the portfolio fares up or holds up relatively better. But at the same time, I think we are also focused on return generation on the other side of this turbulent phase. And which is why I think two pockets that we were usually bottom-up investors, but we also keep an eye out on longer-term macro themes. I think two themes that you will see clearly stand out in the portfolio is one, manufacturing. I think India continues to be in a spot where it will continue to gain market share gains in the global economy. So we continue to like manufacturing-related names. And the second theme obviously is consumption. I think it's again a structural story in India. And as I sort of alluded to earlier, a K correction in 2023 should mean that mass consumption should come back. And I think our portfolio is decently skewed to take advantage of that. So I think on an overall basis, we continue to focus on the long term, and we think of the uncertainty that the next 6 to 9 months will bring us as an opportunity to create portfolios for the long term. For investors who are very conservative, we have a long short AIF where we try to focus more on downside protection and secondary on return generation. It's a very conservative portfolio versus the PMSs. But I think on an overall basis, 2023 is that in between year where a K correction happens, which makes the economy a bit more balanced, and that sets ground for a multi-year recovery, not just in economic growth but also in corporate profits in India. I think investors who can live through in the next 3-6 months of volatility should be handsomely rewarded over the next 2 to 3 years. So I think with that hope, with that positivity, and with that confidence, I will take adieu for now, and hope to see you back in the next edition soon. Till then, thank you.